Well, welcome back to another edition of Commodity Chat powered by Trader PhD. I'm head of market content, Dawson Schmidt. Joining me again this week is Ag Market Advisor Nick Lawrence.
Hello, everybody.
Well, navigating commodity markets, of course, comes with more, not necessarily surprises, but volatile updates that always happen to the market. And Nick, I think to kick things off here this week, of course, I think we're going to talk about it as the last thing for today's chat, but moving it up to the front because we got news on Tuesday that the U.S. and Iran entered a ceasefire with one another, so putting a pause to the war. And quite a bit of volatile trade overnight with the opening of especially the grain markets, of course, with the crude oil market. Big plunge there for crude oil, and then of course grains follow suit a little bit, and then stocks surging higher overnight on, I guess, what it seemed as good news. So I don't know, initial reactions from the latest from the I guess non-conflict in the war in Iran right now.
I mean, as we've been saying, war premium similar to weather premium. It can be easy come, easy go, and the first sign of stabilization, this is what you get: kill first, ask questions later. And so that's what they're doing overnight for sure. Um, nice, I guess, callback here for the most part. This morning, um, I think this volatility, until we know more about, is this ceasefire for real? Are things really coming down? Are things really moving through the strait? How much and how fast is that product flow uptick? And we're going to be watching that like a hawk to see. Um, but yeah, I mean, if you were buying this on the idea that the war is going to disrupt things, then obviously you would sell it when that becomes calm. So it makes sense. And now the market needs to position.
Yeah, you mentioned trade flows. Got a thing up here from early this morning from Bloomberg, just showing kind of the ships that are currently in the Strait of Hormuz. And, we saw earlier that, a lot of these ships were still hugging parts of Oman, which is right across from Iran on against the strait. And so there wasn't a lot of things moving this morning. And you talk about, the potential of some things starting to move. You can see a little bit between the difference of these two pictures that, there are some ships that were, getting closer to the middle of the strait and possibly transiting. And so, I guess vessel lineups show that, there's a little bit of movement, but the reports that continue to come in, there's still a lot of uncertainty of what this ceasefire means. That there's still 800 ships or over 800 ships in the strait that are still looking for direction on, is it truly safe that we can get things moving here, essentially.
Yeah, there's already been a little bit of a blip already this morning on that. Just Iran is still lobbing rockets at Lebanon. So they put a little bit of they're kind of disrupt things here a little bit this morning. But for the most part, so that's kind of uncertainty that you're going to see, I think, until we'll get a little time under this and until things can normalize if they do. So a little bit at a time.
Yeah, and I mean, the two big impacts of the strait that we've been focused on is fuel prices, oil prices in general, as well as fertilizers. And so, I mean, uh, when looking at the strait by itself, obviously not all oil and fertilizer pass through the strait, but there's still a lot that passes through there. And so, I mean, we saw a big decline. What we already talked about is like a 98% decline in transit in March. And then I try to look at, data coming into this morning of if, there's more lineups following the ceasefire, and that really didn't seem to be the case yet. And so, I mean, that still leaves the implication of, what does this mean for fuel prices moving forward? Can things get back to normal, especially with fertilizer? We've seen just this massive run up in fertilizer prices. Yeah, it's never a good time for something like this to happen, and making prices surge the way they have. But I mean, for the most part, the U.S. had the supplies that it needed to get us through this current marketing year. But so yeah, the question remains, how long will something like this, or the after effects of something like this persist?
Yeah, I have a hard time believing that prices have rallied off of this issue And then during peak demand, it's just they're going to tank.
Mhm.
Kind of have a hard time believing that. But they'll come down when supplies start to move, right? When supplies start to move, and those retailers want to move product, um, that's when those prices will come back down.
Yeah.
In my opinion.
I mean, product is moving a little bit already, as what we saw here for parts of January, February, and even in March here. I mean, the fertilizer flows to the U.S., outside of the strait as well, seem to kind of be flowing a little bit. We had some stronger moves in January and February, just looking at census data, and then we're still getting some shipments from our other suppliers. Russia, it doesn't have to go through the strait to get fertilizer here. So I mean, we're still bringing things in terms of the U.S., but obviously this is global market, so we're just going to have to wait and see with things here moving forward.
Yeah, and really what I was implying there was more like the maps you were kind of showing earlier, like
Yep.
our trade flows actually picking back up, unrestricted, that type of thing.
Yep.
Yeah, I think when those retailers get a little bit of confidence there, that things will make it through, actually make it to our shores and really, bigger pictures, other people's shores, Australia, EU, that type of thing, South America. That's when prices may start to slip.
Yeah, and I mean, just to kind of wrap up that conversation specifically, um, we have a 2-week ceasefire here. So what you and I were talking this morning, or I mentioned this morning, is that you know we're just kind of kicking that can down the road again. What in 2 weeks, where are we going to be at again? Are we still going to be back to, bombing around again, and then that strait being closed? I mean, that's hard to say. And that, when we were having the whole tariff thing going on last year, we just had deadline after deadline after deadline that the markets had to kind of navigate around. And so here we are with another one.
Definitely a good reminder to step back and not be emotional with the market. Let things play out a little bit to some extent. That's not to say to bury your head in the sand and just forget about it,
Mhm.
but to try to detach yourself just a little bit from intraday market swings, daily market swings, that type of stuff, and really try to zoom out and look at the picture more holistically. Um, it's a fine line between paying attention but also not being absorbed by it. It's a tough tightrope to walk. But it's what you need to try to do at this time. Again, don't ignore it, but also don't immerse yourself in it
Mhm.
when we're trying to make decisions.
Yeah. And with the more things coming up, oh man, we were in the same boat last month. The war had just begun, or the conflict had just begun, and we had a WASDE report. Well, we got another WASDE report, and big things are happening again. um, again, I don't think April is necessarily gonna, be quite the market mover. We just got done with the quarterly grain stocks report here in late March, and then of course, the more the updates to the conflict and Iran with the ceasefire. So I wonder if, the WASDE is going to get put on the backdrop again here. But, Thursday is another WASDE day where the USDA is going to offer a little bit, maybe minor adjustments to the U.S. Grain balance sheets. Pre-market expectations are coming in, not really expecting much of a change specifically to ending stocks, but I know there's still some demand aspects to these balance sheets that the USDA may adjust a little bit.
Yeah, getting down to it on wheat as far as, okay, you got corn exports first, it's fine. You know, demand has been the leader there in that market. Obviously, I think there are obviously question marks on whether that all well, we're gonna have a monthly, maybe not a monthly record, but close to it last month, I think you said, as far as export inspections on corn. Is that right? Or
Sorry, say that again.
a monthly record?
Oh, yes, yes. March, uh, not necessarily a record.
But up there.
It
Just up there.
definitely up there. So I
Right.
mean, our exports on a monthly basis trailed off quite a bit. We came in with the new marketing. You're just firing shots right away on the corn export front, up quite a bit year over year. And when we popped up there, we just kind of stayed flat. on a monthly basis. I mean, we're still hitting marketing near highs on a weekly basis here and there, but monthly exports have stayed relatively flat. When we get the March census data, it's likely going to show a pretty large month here again. So I mean, it just shows that yes, we may not be, I guess, going at the same fast pace as we had at the start of the marketing year, but we're still going to stay up there, at least on
And
a year over
I
year.
think that was, my broader point though was even though that's there, is it enough? Right? I mean, you've got potentially ending stocks slightly increasing from last year. You've got like what we saw in the quarterly grains, on farm storage is 20 some percent higher year over year. So even though our exports have been at a blistering pace, I guess you could say, may not be enough still.
Yeah, I mean, we got to watch out for how our domestic usage is still coming in play. For example, I mean, the corn ethanol front, this was last week's data. We did just get an update, so this chart's not quite updated, but ethanol production has remained at a very good pace compared to previous years. I believe total production as of right now is up about 8% year over year. But when you look at the crush pace, we're kind of lagging, if not maybe just on pace with where we were at a year ago. And so despite record ethanol production, total corn crush has not necessarily been as impressive, largely because ethanol processors have become more efficient just this past couple seasons. And then as well as, when China was absent from our sorghum market, we were of course trying to find places to take that. So ethanol processors were willing to take those at lower prices. And so we bumped up our sorghum usage as well. And so, I mean, those are a couple competing factors to where it's like, yes, ethanol is going to be great this season. But how is corn crush going to be impacted because of those other two factors?
Yeah, it's a tangled web, and then you see that feed demand is all at corn, and that's always the wild card there. Especially when we get to the get through the summer
Mm-hmm.
and get to that the one there kind of at the end of the summer. It can make for some interesting surprises. And right now the assumptions are there's plenty of inventory in a sense, even with the high demand that we have. The question is, does something get reconciled based off feed demand later in the summer? That's kind of what you're hanging on to here at this point. Because everything else is tracked, right? Your ethanol production is tracked, bean crush is tracked, everything's tracked, exports are tracked. It's just what we're feeding the critters.
Yeah.
That's the hardest part.
Yeah.
So the flock, pigs, cattle,
Those cattle weights, I mean, can what we're putting into the cattle kind of make up for it and make the USDA's number a little realistic? I'm not saying that they're right and that we're going to have 6.2 billion bushels go into feed consumption this year, but I mean, isn't that the buffer? Because we have dress weights, as far as I've seen that lately, is that they're pushing up against 1,000 pounds on average.
Yeah, I mean that hasn't changed, right? I mean
Mhm.
the lesser numbers with the excess capacity, uh, and relatively economical corn. I mean, definitely being incentivized to just keep pushing weights, keep pushing weights, keep pushing weights. So
Mhm.
yeah, that definitely hasn't changed.
Yeah.
Not even close.
Uh, Soybean balance sheet though, this is kind of the
Not as
opposite.
good.
Yeah, it's kind of the
Not as
opposite effect. Um, on a total basis, our soybean ending stocks are not necessarily burdensome yet, but I mean, there's still that potential out there that with soybean export inspections or total commitments running at the pace they are. I mean, can China either step in or can prices, go lower again to get other foreign buyers kind of interested in our soybeans again? Because they were running at a really strong pace, aside from China. But once China stepped back in, that kind of raised prices up a little bit. And then even when China stopped buying, our prices stayed elevated and other global buyers got pushed to the wayside. So I don't know, maybe a little bit of a chance that we could have USDA eventually lower this export pace.
which would obviously not be great. I mean, the balance sheet itself isn't, completely bearish yet. I mean, kind of floating around that 300 million bushel mark. But and then globally though, it's just not. It just doesn't have the positive tone that corn has generally, right? That global demand's high, global production just barely keeps up, whereas bean demand, it's almost just like find a place to tuck it different parts of the globe, whether they crush them and tuck it somewhere else, and you take a pile of beans, and yeah, the bean balance sheet gets reduced, but then meal somewhere else gets inflated. So it's just not. It's just for right now. It just doesn't have the same spin.
Yeah. I mean, it's hard to deny the growing demand of soybean meal used for animals too. I mean, U.S. exports, yes, we're crushing a record, so we're gonna go hand in hand with shipping record amounts of soybean meal. But I mean, total soybean meal demand throughout the world really has been strong itself. And so, yeah, I mean, it's gonna come down to are we gonna do the value add and push that into animals and bring up, keep demand moving forward that way. And that kind of seems to be the case for at least our domestic demand is, maybe it might not offset, lower exports completely, but it's at least providing a little bit of that buffer too.
Yeah, for sure. I mean, it's what you like to see, right? Crushing corn and beans for fuel, and then using those byproducts as feed. I mean, that's the split you want to see. So
All right, you want to talk about wheat because I know you
sure,
wanted to talk about wheat
yeah, wheat's an
earlier,
interesting one.
but yeah, I mean, uh, so pre-report expectations again, marginal adjustments expected to that. I know it was down 8 million bushels. Typically, when it's below 15 million bushel adjustments for these crops, the market expectation is mostly neutral, in my opinion. But yeah, I mean, not much change expected there. But we're still looking at a strong wheat export pace, and I think that's really the only thing to be looking at ahead of this report to determine if the USDA is going to adjust anything. And I don't know. What do you think? It just seems like there's not really enough to go off of when we have less than 2 months left of the marketing year.
Yeah, so as we've been talking this whole kind of winter and beginning of spring, really just export sales took off like a rocket ship. At the beginning of the marketing year, and it got gassed early, and it just trailing down a little bit. Still strong, obviously, but just not, I guess, what it could have been if we could have kept that pace. And I mean, I texted you last night after the open, and I'll be the first to admit I was wrong about to use your word insulated. I was wrong about wheat being relatively insulated from this conflict. I mean, I thought the wheat market was pricing in a little bit more of a weather market and maybe some issues in Australia. Yeah, I mean, it was due to the war, and then just high demand, low acres, et cetera, et cetera. And boy, I mean, wheat's having the hardest time of just about anything besides crude.
Yeah.
And I'll be the first to admit I'm a little surprised by that it couldn't trade similar to like beans and corn in the extent that, yeah, you got the knee-jerk reaction, but maybe bounce back. So it's going to be interesting to see how this unfolds. It's still, I think we're still making the right decisions on kind of being patient to see how things play out. But continued thunderstorm activity through most of the plains, and then trade flows kind of start ramping back up, maybe just in time for Australia to get their seedings done, and then our first winter wheat condition made this nice little map to kind of depict how terrible that was through the plains. SRW countries mostly okay, but you can obviously see how bad it was there through the plains, and are these rains going to be too little, too late? Obviously, yet to be determined.
Yeah. What was it from Eric Snodgrass yesterday, or I guess on Monday? He was saying that he had one producer he was talking to was in Oklahoma that was saying that he's looking at total crop losses. So I mean,
Yeah.
agronomically, I think we're still in a wait and see mode on if some of these rains can revive what it hasn't seen total losses. But yeah, Plains off to a pretty poor start just in crop conditions in general for HRW wheat country. And that was kind of signaled earlier just a few months ago is that, for a long time, SRW wheat held a premium over HRW, which is not necessarily always the case, but HRW was able to regain its typical premium here just over this past month. And so I think that was kind of or I guess past month and a half maybe. I think that was kind of where the story was first arising was just in the relationship between those two wheat categories. That yeah, there's a little bit of a dichotomy where SRW wheat areas are looking okay and HRW wheat areas are struggling a little bit more.
Yeah. And so I just think, you know, more as a total wheat crop as a whole, there's plenty of volatility, I think, left to be had just domestically, maybe not, globally, but yeah, I mean, if these rains are too little too late through, Oklahoma and Kansas and um, parts of Texas there up through Nebraska. And I was just talking to a producer earlier today, Southwest Nebraska that um is dry land. I mean, they're dry. It's just the stuff that's going to be under pivots is right now the only thing that's really going to get seeded um, with any confidence. So, as far as wheat's concerned, I guess could be too little too late, but I guess really until we kind of see more of these production reports and um, you know crop tours and stuff like that through there, we just won't know.
Yeah, was it the Wheat Council or something will have one of
Kansas,
have one
yeah,
of its
Kansas always puts on a big one.
Yep. So we'll get some updates here here in the next couple of months. And yeah, I mean this last map here just showing a large swath of the plains even getting some decent rain, above average expectations to near average expectations for some winter wheat areas. So I mean it's a matter of can we reverse a lot of these drought issues in places that have been actually some places that have been in drought still that just this past 5 years they really never exited that drought period. And so there's going to be some problem areas for some folks here moving forward. But yeah, that's kind of the extent of what we have here for the short term. Of course, again, another little deadline that the markets are having to contend here with this ceasefire and how things shape up here on the balance sheet. So going to be watching that uh, here moving forward.
Yeah, I think we were talking this morning. Does the WASDE even matter tomorrow? And obviously,
Yeah.
it matters. I mean, to some extent, it's going to be a blip. And if there's nothing too wild and crazy, you're just going to move right on from it.
Hmm.
And it's this Iran Strait of Hormuz deal is 100% nature of the game, the name of the game. So um, as long as that stays calm and things continue to move forward, which I think is in the best interest for Trump, and it's kind of a different conversation. But I truly believe he's been trying pretty hard to get this thing wrapped up, and I, I'm hopeful that it continues.
All right. Yeah, going to keep our eyes on that here moving forward. But thanks for listening, and I'll wrap up this episode. And in the meantime, I'm Dawson Schmidt.
And I'm Nick Lawrence.
This has been Commodity Chat from Trader PhD.